Hey everyone, Sofi reported fiscal year 2023 second quarter earnings results. So in this video, I'm going to review those figures. I'm also going to update my recommendation of Sofi stock. Coming into these earnings results, I had the stock on the borderline between a hold and a buy. I didn't quite yet recommend the stock as a buy. So you're going to want to tune in to see if I'm changing that recommendation. So let's get right into it. Total revenue came in at 498 million. That was a 37% increase from the same quarter the prior year. So excellent top line growth. More importantly, the net loss improved to 47.5 million. That was better than the $95.8 million it lost in the same quarter last year. I like to see this from growth companies. I want to see their revenue growth lead to improving growth on the bottom line. If they're losing money, that's okay. I at least want to see them getting closer to profitability, which SoFi demonstrated strongly in this quarter. Personal loans made up 65.5% of loans originated in the quarter. This was up from 59.5% in the second quarter last year. Now, I've been saying that I would like SoFi's percentage of loans to skew a little bit more balanced, not be so heavily weighted towards personal loans. I'd like to see more home loans and more student loans originated from SoFi. Student loans may not be entirely under its control with all of the legal issues and the US and the order about forgiving student loans and then not forgiving student loans and all of that. So that is understandable. And then SoFi made an acquisition a couple of quarters ago of a home loan company, and that should help bolster its home loans. But what I did like about this quarter is the disclosure of the average coupon rate for personal loans was 13.6% with a default rate of 4.6%. Now, SoFi offers folks about 4.5% for depositing their money with SoFi and setting up a direct deposit. So for SoFi, it costs them about 4.5-5% to get money, and they're lending it out at about 13.5%. So that's a nice spread there between how much it costs SoFi for money and how much they're lending money out. What remains unanswered is how this portfolio of personal loans will perform during an economic downturn, during a recession. That's the big question mark hanging over SoFi. Now, I understand SoFi goes after, high credit score customers, affluent customers that are making over $100,000 per year. So in the event of a recession, those types of borrowers should not default at a very high rate. But the rate, whatever it might be, remains a question mark. That's the question mark. With other more established banks, you have more data, you have more history in how they perform in recessions, right? Even if it's not performing very well, as most of the banks really didn't perform at all very well during the great financial crisis. So once SoFi answers that question and it makes it through a recession unscathed and makes it through relatively well, I think this stock could soar. I think that's the big question mark that, if answered, will really bolster SoFi's valuation. SoFi added 584,000 net members to reach 6.2 million. Right now, like I mentioned earlier, that 4.5% rate on your deposits is very attractive for customers. It's helping SoFi attract many new customers because banks like JP Morgan and Bank of America, they offer you hardly anything on your deposits. And so, of course, if you're getting close to zero at Bank of America and SoFi is offering you 4.5% on your money, it's an attractive proposition to move your money over to SoFi. Here's another question mark. How will SoFi do when interest rates come down and it's no longer able to offer that 4.5% attractive yield to get people to come over? Will it still be able to attract members? And how many, right? So that's another thing, right? So if interest rates come down dramatically, and the difference between Bank of America and SoFi, let's say Bank of America is still at 0% and SoFi offers you 1.5%. Will that be enough to get people to take the time to switch banks? Because remember, that's a big hassle in time, right? So that's an interesting answer that also remains to be found out for SoFi stock investors. Total deposits impressively grew by 26% to 12.7 billion. Remember that time a couple of quarters ago around March when we had that big scare in banks in the US? People were concerned, investors were concerned how SoFi would fare. Would people pull their deposits out of SoFi? That hasn't been the case. That question was answered emphatically in favor of SoFi here. Deposits continue to grow by billions despite the scare in the banking industry. And all of these excellent results gave management confidence to raise the outlook for the rest of the year. So, no doubt about it, an excellent quarter from SoFi. The stock was popping by double digits. It was up about 10% following these results. The stock has exploded. It was close to $4 per share at one point this year. Now it's up over $11 a share. So it's had a phenomenal run, to be sure. So, to answer my question about recommendation, I'm upgrading SoFi stock. I'm upgrading it from being on the borderline between a hold and a buy. I'm just making it a buy. The company's done a good job growing revenue and allowing those revenues to improve losses on the bottom line. And it earns a strong average coupon rate on those personal loans, although I am still concerned about how these personal loans will perform during a recession. So I guess that's the big risk with SoFi, but I think the potential reward outweighs that risk. So investors are getting a good risk versus reward for SoFi stock right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.